Welcome to English 3 months. Ready to level up your English? Here, we'll learn through stories, slow, clear, and fun. Listen, relax, and enjoy the journey. Today, we talk about US slaps steep tariffs 3,500% on Southeast Asian solar imports. US President Donald Trump unveiled the much-anticipated Liberation Day reciprocal tariffs in a speech at the White House Rose Garden, imposing a minimum 10% tariff on all countries and additional levies on approximately 60 nations deemed the worst offenders. During his address, Trump displayed a chart listing the countries subject to higher tariffs, with China, the European Union, and Vietnam facing rates of 34%, 20%, and 46%, respectively. Other nations, including Japan, South Korea, India, Cambodia, and Taiwan, will be hit with import duties of 24%, 25%, 26%, 49%, and 32%, respectively. The 2nd of April 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day we began to make America wealthy again. Trump declared, "Our country and its taxpayers have been ripped off for more than 50 years. But it isn't going to happen anymore." Reciprocal. That means they do it to us, and we do it to them. Very simple. Can't get any simpler than that, he added. We will charge them approximately half of what they are and have been charging us. So, the tariffs will not be fully reciprocal. The Trump administration confirmed that Canada and Mexico would be exempt from the baseline 10% tariff and reciprocal levies for now, as both nations are already subject to existing 25% import duties. Goods covered under the North American Trade Agreement will also be excluded from the new tariffs. Additionally, steel, aluminum, and automobiles, which are already subject to import levies, will not be affected by the new reciprocal tariffs. However, Trump is expected to announce further tariffs on copper, pharmaceuticals, semiconductors, and lumber in the near future. The baseline tariffs will take effect after midnight on Saturday, while the higher rates will be implemented from next Wednesday, Bloomberg reported. Stock markets fall following Trump's tariff announcement. Risk-off sentiment swept through global markets in response to Trump's tariff announcement. European stock markets had already closed by the time of his speech, but U.S. stock futures fell sharply in extended trading, with the S&P 500 dropping 3%, the Nasdaq plunging 3.8%, and the Dow declining 1.8%. All major technology stocks, including the so-called Magnificent Seven, slid between 1% and 3% in after-hours trading, with Apple leading losses down nearly 3%. The sell-off is expected to extend into Thursday's trading session. With global repercussions, the overall tariff levels are on the high side. So markets need to price in a bigger shock to the economy, said Kyle Rada, senior market analyst. At Capital.com, Australia, European stock markets ended lower ahead of Trump's announcement, extending the sell-offs seen in March. Investors are now watching for a response from the European Union. On Tuesday, European Commission President Ursula von der Leyen stated that the EU had a strong plan for retaliation while keeping the door open for negotiations in currency markets. The euro fell slightly against the US dollar, but remained above 1.08, swinging widely in both directions amid mounting uncertainty. Commodity-linked currencies, including the Canadian dollar, Australian dollar, and New Zealand dollar, dropped sharply against the greenback, while the Japanese yen strengthened significantly as investors sought haven assets in commodities. Gold surged to a new record high on haven demand, while industrial metals, particularly copper, slumped more than 2%, and crude oil futures fell nearly 1%. President Donald Trump's administration has announced a sweeping new tariff of up to 245% on Chinese imports, sharply escalating the trade conflict between the United States and China. The decision, detailed in a fact sheet released late Tuesday by the White House, comes in response to Beijing's recent export restrictions and retaliatory tariffs. China now faces up to a 245% tariff on imports to the United States as a result of its retaliatory actions, the White House said, emphasizing the move as part of Trump's ongoing America First trade policy. The administration accused China of deliberately restricting vital high-tech materials, including gallium, germanium, and antimony elements critical for military, aerospace, and semiconductor industries. More recently, China suspended exports of 6 heavy rare earth metals and rare earth magnets, tightening the grip on components essential to global supply chains. A few months ago, China banned exports to the United States of gallium, germanium, antimony, and other key high-tech materials with potential military applications, the statement said. Just this week, China suspended exports of 6 heavy rare earth metals, as well as rare earth magnets, in order to choke off supplies of components central to automakers, aerospace manufacturers, semiconductor companies, and military contractors around the world. U.S.-China trade war. In a tit-for-tat escalation, China raised its tariffs on U.S. goods to 125% last Friday. That move came shortly after President Trump increased tariffs on Chinese imports to 145%, while pausing additional tariffs on goods from other countries for 90 days. Despite the broad reach of the new tariffs, the administration noted that other countries are currently exempt due to ongoing trade negotiations. More than 75 countries have already reached out to discuss new trade deals, the White House said. As a result, the individualized higher tariffs are currently paused amid these discussions. Except for China, which retaliated, the White House also revealed that the administration has launched a national security investigation into the import of strategic resources, underscoring growing concerns about the U.S. reliance on foreign materials that are crucial to advanced manufacturing and defense technologies. Donald Trump, who has made trade reform a central pillar of his second term, framed the move as a continuation of his commitment to protecting American industries and securing supply chains. On day one, President Trump initiated his America First trade policy to make America's economy great again. The statement read, while the exact list of goods impacted by the up to 245% tariff has not been disclosed. Analysts say the dramatic increase could hit a wide range of consumer and industrial products. China's response: China wants to see a number of steps from U.S. before it will agree to trade talks, including showing more respect by reining in disparaging remarks by members of his cabinet. Reports Bloomberg. Other conditions include a more consistent U.S. position and a willingness to address China's concerns around American sanctions and Taiwan. The report added, Beijing also wants the U.S. to appoint a point person for talks, who has the president's support and can help prepare a deal that Trump and Chinese leader Xi Jinping can sign when they meet. The U.S. set new duties as high as 3,500% on solar imports from 4 Southeast Asian countries, delivering a win for domestic manufacturers while intensifying headwinds already threatening the country's renewable power development. The duties announced Monday are the culmination of a year-long trade probe that found solar manufacturers in Cambodia, Vietnam, Malaysia, and Thailand were unfairly benefiting from government subsidies and selling exports to the U.S. at rates lower than the cost of production. The investigation was sought by domestic solar manufacturers and initiated under former President Joe Biden. While the duties are set to benefit domestic manufacturers, they also will pinch U.S. renewable developers that have long relied on inexpensive foreign supplies, heightening uncertainty for a sector whipsawed by political and policy changes in Washington. The levies will be in addition to new widespread tariffs imposed by U.S. President Donald Trump that have upended global supply chains and markets. The anti-dumping and countervailing duties, as they are known, are designed to offset the value of alleged unfair subsidization and pricing, as calculated by the Commerce Department. The department's determination is a victory for domestic manufacturing that both Trump and Biden have tried to galvanize. Potential beneficiaries include Hanwha Q-Cells and First Solar Inc., among others, although the promise of subsidies and demand stoked by Biden's Inflation Reduction Act have helped drive a wave of interest and investment in new domestic solar panel factories across the U.S. Manufacturers warned those factories were imperiled by foreign rivals selling their equipment at below market prices. This is a decisive victory for American manufacturing, said Tim Brightbill, co-chair of Wiley's International Trade Practice and lead counsel for the coalition of solar companies that pursued the case. The findings confirm what we've long known, that Chinese headquartered solar companies have been cheating the system, undercutting U.S. companies and costing American workers their livelihoods, he said. Countrywide duties were set as high as 3,500% for Cambodia, reflecting the country's decision to stop participating in the investigation. According to the Commerce Department, the U.S. imported $12.9 billion in solar equipment last year from the 4 countries that would be subject to the new duties, according to Bloomberg and Eve. That represents about 77% of total module imports. Companies not named in Vietnam face duties of as much as 395.9%, with Thailand set at 375.2%. Countrywide rates for Malaysia were posted at 34.4%. Jinko Solar was assessed duties of about 245% for exports from Vietnam and 40% for exports from Malaysia. Trina Solar in Thailand faces levies of 375% and more than 200% from Vietnam. Ja Solar modules from Vietnam could be assessed at about 120%. Chinese solar stocks remained largely muted after markets opened on Tuesday, with Trina down 1.6%, Jinko down 0.9%, and Ya Solar down 0.1%. As the U.S. decision was largely expected, and companies have been moving some manufacturing capacity to tariff-free nations such as Indonesia and Laos. We don't think the higher rates will have much financial impact, especially post-recent reciprocal tariffs. According to a note by Buffet Global Research, Indonesia is expected to have more than 20 gigawatts of foreign-owned solar manufacturing capacity by the middle of this year, from just 1 gigawatt at the end of 2022, according to Bloomberg NEF. However, other nations, including India, Indonesia, and Laos, could be targeted by a possible new round of duties later this year. According to a note by Roth Industries, citing Joseph C. Johnson, an associate director at Clean Energy Associates, Chinese solar maker Ya Solar, said in a written response to Bloomberg News that the company is closely monitoring the U.S. tariff development while accelerating its globalization efforts. These include a manufacturing plant in Oman that will start operation by the end of 2025 with 6 gigawatt cells and 3 gigawatt module capacity. The duties hinge on separate action by the U.S. International Trade Commission, which is set to decide in about a month whether producers are being harmed or are threatened by the imports. After similar duties were imposed on solar imports from China roughly 12 years ago. Chinese manufacturers responded by setting up operations in other nations that weren't affected by the tariffs. The U.S. initiated a probe that was triggered by an April petition from the American Alliance for Solar Manufacturing Trade Committee, which represents companies including First Solar, Hanwha, Q Cells, and Mission Solar Energy, LLC. Thanks for watching.